Hello, I'm Matt Pierce, Vice President and Senior Portfolio Manager at TrustBank Wealth Management. Welcome to this installment of Chart of the Month. Over the past several months, we have spent a lot of time discussing artificial intelligence and the tremendous amount of investment flowing into data centers, semiconductors, power generation, and the infrastructure needed to support this rapidly evolving technology. We've also seen impressive earnings growth from many large technology companies, as well as businesses across other industries that continue to incorporate AI into their everyday operations. But during the first quarter of this year, something happened that caught our attention. Investment in AI has reached a point where it began to have a measurable impact on overall U.S. economic growth, as highlighted in this month's chart. Gross domestic product, or GDP, can be broken down into four primary components: consumer spending, business investment, government spending, and net exports. Normally, consumer spending is the biggest driver because it represents roughly 2/3 of the U.S. economy. If we look at the far right side of the chart, however, you'll notice that consumer spending contributed less than 20% of total economic growth during the first quarter of 2026, well below what we typically see. Ordinarily, that would have resulted in much weaker GDP growth. Instead, the economy still expanded at a 2.1% annualized rate, largely because business investment surged. A meaningful portion of that increase came from the continued build-out of AI infrastructure. The chart on the right isolates the contribution from AI-related investment. As you can see, that contribution has increased dramatically over the past several quarters, reaching a record high in the first quarter of 2026. To put that into perspective, AI infrastructure investment alone accounted for nearly 30% of total U.S. economic growth during the quarter. While this is certainly noteworthy, it is important to keep it in perspective. The U.S. economy remains highly diversified, and we do not expect AI investment to contribute this much to economic growth indefinitely. Consumer spending continues to be the largest and most important driver of long-term economic expansion. History has seen similar investment cycles before. Railroad construction fueled economic growth during the late 1800s, and the internet build-out drove investment throughout the 1990s. Today, AI infrastructure is playing a similar role, creating another important source of economic activity. At TrustBank, we believe successful investing is built on disciplined portfolio construction, not chasing the latest trend. While innovations like artificial intelligence can create meaningful opportunities, maintaining a diversified portfolio aligned with your long-term objectives remains the foundation of our investment philosophy. If you would like to learn more about our investment approach and how we can help you pursue your long-term financial goals, we would welcome the opportunity to start the conversation.